Welcome back. This is 7 National News, and in our top business story, the UAE Companies Investing Abroad Council has underlined the importance of Egypt as a major destination for Emirati and Arab investors due to Egypt's diversified market, infrastructure, as well as the government's efforts to remove obstacles to inbound investments from the UAE in particular. At a meeting with the Egyptian Minister of Investment, Ashraf Salman, in Abu Dhabi, to discuss ways of boosting Emirati investments into Egypt, the Secretary General of the Council, Jamal Al-Jawan, noted that the Egyptian government is developing new regulations to attract more Arab investors. Al-Jawan also noted that the council was created to support and protect the interests of Emirati investors and forge relations with relevant government and non-government entities in the UAE and abroad. The Egyptian Minister of Investment further noted that Egypt's economy grew at 4.2% in the 2014-2015 fiscal year, up from 2.2% the previous year, and that the budget deficit dropped to 11.5% of gross domestic product in the fiscal year 2014-2015. He expects that the deficit will drop to 10.25% by the end of this year. Dubai terminal operator DP World has announced that it is launching a joint venture with a state-owned Russian investment fund to upgrade ports and logistics infrastructure in Russia. DP World said in a statement that the new company is expected to invest a total of $2 billion into upgrading Russian ports, as well as introduce international best practices in operations to improve trade connectivity. On the sidelines of the World Economic Forum in Davos, Sultan Ahmed bin Sulayem, the chairman of DP World, and Kirill Dmitriev, the CEO of the Russian Direct Investment Fund, signed a document determining the key terms and principles of the joint venture, in which DP World will own an 80% shareholding, with the remaining 20% held by RDIF. Bin Sulayem stated that Russia has always been an attractive origin and destination market for them, with huge long-term growth prospects. This joint venture allows DP World and RDIF to build on each other's strengths in bringing economic prosperity to Russia. Average residential property prices fell 10% during 2015 and are set to drop even further this year, reflecting a transition into a more mature market. That's according to a new report by Deloitte. Its annual real estate predictions report for Dubai also suggests that around 10,000 units will be delivered this year, down from other industry forecasts of around 40,000. Robin Williamson, the managing director of Deloitte Corporate Finance Limited, was quoted saying that today Dubai's real estate market is maturing and feeling the effects of various market drivers, whilst demonstrating strong resilience in certain sectors. He added that despite the decline in average residential sales prices in Dubai during last year, price growth over the last 4 years reflects a compound annual growth rate of 11.6%, which outperforms other leading global cities such as London, Paris, and Singapore. Deloitte also said that office rental growth in Dubai during 2016 will be slow in some sub-markets as a result of supply growth, and the power of negotiation will in general shift from landlords to tenants. The UAE has been ranked at the number 2 spot behind China in the 2016 Agility Emerging Markets Logistics Index. Now in its 7th year, the index ranks 45 leading emerging market countries based on their size, business conditions, infrastructure, and other factors that make them attractive. Among the countries in the index, the UAE, Qatar, and Oman are the most business-friendly, based on a combination of market access, risk, regulation, foreign investment, urbanization, and wealth distribution. Other Gulf states also rank near the top in terms of business conditions. Saudi Arabia in 5th place, Kuwait in 9th, and Bahrain in 11th. The UAE leads all 45 countries in connectedness, meaning that it has the best combination of infrastructure, transport connections, and customs and border administration. The survey findings also show that logistics industry executives are braced for more uncertainty and volatility in emerging markets in 2016. 61% say that they are unclear on the direction of the world economy or expect more turbulence. Their top concerns: China's economic health, oil prices, and the direction of the US economy.